All right, if you're a trader, you know the feeling. You're staring at a chart and the candlestick patterns just feel like chaos. Well, today we're going to cut right through all that noise. I'm going to show you a completely new way to read the charts that'll totally flip the script on how you see the market. Let's get into it. You ever feel like this? You start trying to learn technical analysis, and suddenly you're hit with this endless list of patterns you're supposed to have memorized. You've got the hanging man, the shooting star, dark cloud cover, three white soldiers. I mean, it's enough to make your head spin. And you have to wonder, do I really need to cram all of this into my brain to be a good trader? Well, here's the secret. Nope, you absolutely do not. The real power isn't in memorizing 100 different shapes. It's in learning to read the simple story that every single one of those patterns is trying to tell you, the story of what the price is actually doing. And that's exactly what we're going to do today. Okay, so how do we read that story? It all starts with a big shift in how we look at things. We're going to stop looking for subjective little shapes, and we're going to start using an objective tool to measure what's really going on. Think of it like this, right? The old way, it's all about memorizing patterns. But honestly, when you're just looking at shapes, it's often no better than a coin flip. The new way, though, this is about objective measurement. It's about understanding the behavior behind the candle, which is how we find those really high probability moments in the market. So what's this magical new tool? It's called the Average True Range, or ATR. Now don't get scared off by the technical sounding name. Just think of it as a ruler. Seriously, that's all it is. It tells you how much the price moves on average, so we have a solid baseline to measure against. With this ruler, we can see in a split second if a candle's move is actually significant or if it's just meaningless market noise. And here's how we put that ruler to work. Using the ATR, we can sort any candle into one of four really simple categories. A spinning candle, that's a small one, less than 80% of the average move. It basically means the market is shrugging its shoulders. A standard candle is our baseline for something meaningful happening. Then you've got long bars, which show some serious power, and spikes, which are these huge, over-the-top moves that often signal exhaustion. The big idea here is simple. Size matters. And ATR is how we measure it without any guesswork. Okay, now that we've got our ruler, let's get to the really cool part. Let's see how this one simple idea brings together dozens of patterns that seem totally different and shows you they're all just one concept. For this, let's just focus on reversal patterns. You know, when the price looks like it's about to turn on a dime. People usually break them down into patterns that take 1, 2, or even 3 candles to form. Let's look at a couple of classics. First up, you've got the evening star. It's a classic 3-candle deal. You see a strong move up, then a little indecisive candle at the top, and then bam, a strong move back down. It's a whole story about momentum shifting, told over 3 bars. Now, let's look at something that seems totally different, the pin bar. You might also know it as a shooting star. This whole story happens in just one candle. The price shoots way up and then gets aggressively slammed right back down, all in the same period. So on the surface, these two look nothing alike. One takes 3 candles to play out, the other takes just 1. But what if I told you they are telling the exact same story? This right here is the whole secret. A pattern that takes multiple candles on one time frame is often just a single candle pattern on a higher time frame. So that 3-candle evening star on a 1-hour chart, well, if you zoom out to a 3-hour chart, it all squishes together to become a single pin bar. Mind-blowing, right? It's the same thing for a dark cloud cover or a tweezer top. They aren't dozens of different signals. They're all just one event, a major price rejection, seen through different windows of time. So that brings us to the ultimate fix. Instead of trying to learn 100 different names for what is basically the same event, we can just give it one simple, universal name that describes what's actually happening. And we're just going to call it a pivot. That's it. A pivot is just a spot where the market turned or rotated. It's a point where the price tried to go one way, got rejected hard, and showed it was very likely to change direction. It doesn't matter if it took 1, 2, or 3 candles to happen. The story is the same. It's a pivot. But okay, how do we know it's a real pivot? How do we separate a true signal from all the random market noise? Well, this is where our ATR ruler comes back in. The key ingredient, the thing that all real reversals have in common, it all comes down to this one number, 80%. And here is the one simple rule that ties this all together. For any pattern to count as a true pivot, the price rejection, the long wick or the body of the opposing candle, it has to travel at least 80% of the average true range. This brings it all full circle. Remember our standard candle from before? Anything smaller than that 80% mark is just indecision. But anything above it, that's a meaningful, powerful rejection. It's really that simple. So let's make this practical. How does this one concept of a pivot actually help you build a better trading plan? Why does simplifying things like this even matter for your bottom line?
Because it changes everything. Instead of cluttering up your charts and your brain with dozens of patterns, you're now just looking for one thing: a significant, objectively measured price rejection, a pivot. This helps you define key levels where you know control has shifted. It basically screams at you, hey, this is the high probability spot to get in or get out. And maybe most importantly, it gets you out of the trap of just memorizing things and lets you actually understand what the market is telling you.
So here's what I want you to take away. The next time you look at a chart, stop asking yourself, what pattern is this? Forget the names. Instead, ask a much simpler and much more powerful question. Is this a pivot? That one single shift in perspective, it can make all the difference in the world to your trading.